Despite all that excitement about Alibaba, our next guest says the IPO market is going through a reset. She's Kathleen Smith, co-founder and chair of Renaissance Capital, an IPO investment advisory firm. So, Kathy, I know that you've been saying that this is a harsh environment for companies that are going public, but you just heard the news about the Alibaba filing. Could that company be the exception? How do you think it's going to do when it goes public this summer?
Well, we do think that Alibaba could certainly break the code that we're seeing in the IPO market, which has been a pretty harsh environment where since mid-April, the deals that have been priced, the last 70% of them have been priced below the range. So issuers have not been treated very well in the current IPO market. And you know, there's a lot of investors want to see high growth companies, but they want to see profits. Alibaba has profits, so that's going to be an IPO that will be looked at and of interest, we think, to the IPO market.
So would you expect that it will buck the trend of those numbers that you just said? In other words, 70% falling below the forecast range?
We think so, because you can look at Alibaba and actually put a multiple on their earnings and come up to maybe a valuation of that $150 billion. So that is going to make it a little easier to value. And I think almost every portfolio manager is going to want to own this company, which will be the world's largest e-commerce company.
You know, back to the overall IPO market, it was really strong in the first couple of months of this year. And then just recently, the last couple of weeks, it's really gone kind of soft. And we've got a lot of companies going public this week. And in fact, there are a couple of them that are Chinese companies as well, Cheetah Mobile and Tunia, which is sort of a Priceline type company. How do you think these companies are going to do this week?
I do think investors are going to be very selective about these, and there'll be some pricing pushback, particularly the ones that aren't making money. And I do think that there's a focus on the very largest, most valuable internet properties. So I do think it may be harder for this large backup of IPOs that we're seeing to get done. This is actually a good thing for the IPO market, because we need the IPO market to work for investors. And that had been the case all the way through about the first quarter. But the second quarter, it has not been a profitable place for investors. And so the prices have to adjust downward, and then investors will make money. That's how it works. That's a good thing.
What changed and why?
Well, if you look at the overall market, all the high growth, particularly non-earning high growth tech and biotech healthcare companies, had a reset in their valuations. Many of the internet companies are down 20 to 30% from their highs. That had to affect IPOs, because IPOs are priced relative to the already traded companies. So investors have there's institutional investors, and they need to have the logic in where these prices are trading. They just can't trade. Trees don't grow to the sky.
All right, so give us your quick outlook in half a minute of how you think the IPO market will end the year. 140 IPOs so far this year.
Well, we had been very optimistic till about the last month, but we think we could get to above average levels of 250 or so. We're going to go through a slow period now, but I think that once this adjustment's made, we'll see the IPO market come back to more normal levels.
All right, Kathleen, thank you so much for coming on the program. Kathleen Smith of Renaissance Capital.